Hello everyone, I hope you're having a good day. This is Clifford Bennett, Chief Economist, ACY Securities, and we're going to have a quick look at how the day has developed so far. Markets have been a little bit tame, a little bit quiet today, but certainly there are some signs that some of these rallies and bounces are getting tired and starting to roll over. In New South Wales at the moment, we have a situation where the latest COVID outbreak is getting worse. It's still very low numbers, but it is getting worse, and so the government is taking some precautionary steps, as well they should, but nothing too drastic. But certainly the wearing of masks has been extended and other aspects. So for all of Australia, when anything like this happens, there does tend to be a little bit of a slowdown in economic behaviour in all states because we are interconnected. So that will weigh a little bit on the outlook for Australian stocks, but only marginally, because everyone these days seems to just think whatever's happening, it won't last forever and we'll buy stocks anyway. In that regard, the first market I'd like you to see, really, or to show to you, is BlackRock. This is the BlackRock daily chart, and you can see that BlackRock is in a little bit of trouble. That's a very devastating breakdown there in the chart formation. And so it's the biggest fund in the world and it's having a massive markdown. So it just goes to show to what extent all other fund managers around the world are thinking, well, perhaps BlackRock represents the best of the economic post-pandemic boom we're going to see, and therefore it might be time to take some profits on those BlackRock longs. The next chart I'd like to show you is Apple. And we spoke about Apple yesterday, saying it looked good and it continues to look firm. I particularly like Apple if you believe in an ongoing bull market for stocks. I think it will be an outperformer in terms of the big global brands. They certainly are continuing to innovate and expand their streaming services and their data services in a way that means, you know, their revenues are only going to sort of boom in the years ahead. So that's a very strong stock to have if you're believing in a bull market, and it's probably a good defensive stock if we were to have a bear market phase. Price chart is the Australian dollar. The Australian dollar today, very poor performance, really struggled to rebound much at all, and I'd suggest to you the Australian dollar is highly vulnerable to another sharp down move at this point. If we break back above 75 now, I'd adjust that a little bit from this morning, break back above 75.85, it might be out of jail for the moment, but while that resistance holds, you'd really have to be concerned about the Australian dollar outlook over the next sort of 3 to 5 days, perhaps the next few weeks, for all sorts of fundamental reasons, such as iron ore prices peaking and those other factors. On a similar vein, sterling, the Australian dollar, I have liked this for a little while. It's done extremely well. We liked sterling because of the trade deal with the US that was announced recently, and I thought that the commodity prices having run their course represented a weakening factor for the Australian dollar, so it seemed an interesting cross for us to look at. That certainly had a very good run. If you've been involved in that, you might want to take a little bit of profit, but I'd probably still leave some position on the table there. Last but not least, the Australian 200 index, certainly looking tired as well. It's a little bit similar in price action on the day to the Australian dollar. That attempt at a rally that isn't really working, starting to fall back on itself at first ever so slightly, but it is a worrying concern. On those notes of worrying concern, I think I'll leave you there until tomorrow, and I wish you all the very best. Clifford Bennett, ACY Securities, Chief Economist. Thank you.